As we've started off many of our conferences, our first panelist is Frank Ford, who has taken a deep dive into the lending numbers for Greater Cleveland. I think there's nothing more discouraging to look at these numbers and not recognize that there is some progress, but there's much progress that needs to be made. And it's a difficult task to organize such a vast amount of data and make sense out of it. I also want to thank our sponsors who were rolling at the beginning. I want to thank the people who are our conference planning committee who helped us put this together. And most of all, I want to thank our vistas. We could not have ever survived without Vista. And for those of you who are on the call who don't know what a Vista is, it's the equivalent of the Peace Corps. It was started back in the 1930s and has made a real difference with our agency. And this year we have a city planning graduate from Ohio State University and Kathleen Rolenke. And last year we had Catherine Chevernak, who's out in law school at the University of California, Berkeley. So we're really pleased to have you all with us and know that your knowledge and your commitment to making a difference is going to make change. I noticed today or in the news recently that there are people of color who are heading up some of our major foundations, the St. Luke's Foundation and the George Gunn Foundation. When I started in this business, everybody in the foundation world was white, with one exception, Steve Minter. So things are beginning to change, and maybe change in philanthropy and change at the grassroots level will make change happen in the future. Frank, I'll turn it over to you.
Okay, Catherine, go ahead and screen share the document. Thank you. So I'm Senior Policy Advisor at Western Reserve Land Conservancy. I've been doing this research for about 5 years. The first 2 years were less intensive, less extensive, rather. They were partial analysis that I included in broader housing trends reports that I was doing. But this is the 3rd year in a row that I've done a standalone report just on bank lending. As Chip said, this is a vast amount of data. The data starts as 70,000 rows. If you can picture an Excel file with 70,000 rows and 115 columns left to right. So it is pretty extensive. I want to thank, right at the start here, I want to thank Case Western Reserve University, specifically the Neo Can-Do data system they have there, because they do the first look at this data from the federal government, and then they do something very important for me that I don't know if any other researchers who do this have this benefit. They add to the data far over on the right columns for Cuyahoga regions, so east side of Cleveland, west side, east inner suburbs, and all the municipalities. So I thank them very much. This research would not be possible without their help. Let's see, Catherine, I just did page downer and it didn't go down. Oh, there it did. Or did you just change it, or did I do that?
I'm the one controlling it, so.
Oh, you are?
Yes. Unless you would like to. I've given you privilege to do so.
Yeah. How do I do that though? I just tried the down arrow and the page down.
Let me stop screen sharing and then you should be able to.
Oh, you want me to screen share the document? Okay. Just a minute then.
While we're waiting for this, folks, if you want to take a moment and have comments or thoughts, be sure to put them in the chat. We'll try to get to them during the speech.
Well, I don't see it. I don't know why it's not working. Does anybody see that? I don't think you do. Try it again.
Frank, I can screen share for you if you'd like, and just tell me when to advance it.
Well, wanted to be able to go. I'm going to go back and forth a little. All right, I think it's working now.
Yep, we can see it.
Okay. So I'm not going to do all the slides. There's about 60 of them. I'm skipping some of them. I'm just doing ones that have like a green check mark at the top for my benefit. So the scope of the research starts with, I'm looking at 2020 data. That is the most recent data that is available. The home mortgage lending data is often about a year behind before it's actually available to researchers and the public. And then I'm also looking at 5 years of data, 2016 through 2020, for some specific purposes. But the 2020 data has applications that were submitted to 389 lenders, 26,000 applications. And I'm limiting this to 1 to 4 family homes. I'm not looking at multifamily loans, which were actually very, very few. And I'm looking at home purchase and home repair. Those are that'll be the main focus. And I'm looking at only original loan transactions. The data does include cases where a bank made a loan, then they sold the loan to someone. I've excluded those loans. I'm looking just at the original transactions, the bank that made the decision to either make the loan or reject the loan. The 5-year analysis is going to be looking at 3 banks, Fifth Third, Huntington, and KeyBank, that have entered into community benefits agreements with the National Community Reinvestment Coalition. And those agreements are, they're pretty much concluded at this point, or will be by the end of this year. And some of them are being extended, but this will be the first time I think we've had a chance to look at the full history of those agreements since they were started. Then the data sources, I mentioned it's the Home Mortgage Disclosure Act data from a federal agency. It comes through NeoCanDo at Case Western. I also used low and moderate income census data from the US Census for 2014 through 2018. The community benefits agreements. Fifth Third's agreement was 32 billion, 2016 through 2020. KeyBank's was 16 billion, 17 through 21, and it is going to be continued and expanded. Huntington's agreement was 16.1, 2017 through 2021, and it is also being expanded. I've added US Bank lending into this multi-year look because discussions are underway with US Bank about them entering into a possible community benefits agreement. And so I did look at the 5-year history of US Bank just to get some perspective on where have they been over the last 5 years also. KeyBank, worth noting here, the KeyBank, in addition to their agreement with the National Community Reinvestment Coalition, they also entered into an agreement with Cuyahoga County for banking services. This was 1.5 years ago. Unlike the agreement with the CBA agreements with NCRC, this contract does not include an overall dollar target for investment, but it does have 13 community commitments, and the bank is committed to use its best efforts to fulfill those commitments. The banks, all 3 of the banks down at the bottom of the slide, have announced that they have met or exceeded their goals. And I wanted to show you, so the press releases and news reports, Fifth Third says that they have achieved already 41 billion against the 32 billion, the goal that they set. KeyBank says that they have spent 18 billion on their original 16.5 billion. Huntington says that they committed 16.1 and they completed that agreement in 2020. I say this because I think it's worth noting that as you'll see from the research, they may have met those goals in a multi-state geography, but the real question is what has happened in Cuyahoga County, what has happened in the east side neighborhoods of Cleveland, what has happened in the east inner suburbs, the places that are majority African-American population. But from their perspective, they have met their goals. I first want to look at loan application trends. So what I did is I looked at the top 40 lenders who received applications in both 19 and 20. And there are some interesting trends. The top lenders, which is a mix of, some of the big lenders we would recognize and some mortgage companies, there is a mix here. Some of them received less applications, some received more. Certainly COVID-19 is a factor that we'll see in a moment, with fewer applications for home repair. But the interesting thing I found is this bottom right here, that the final 10 in the top 40 are, for the most part, with exception of Chemical Bank, for the most part, these are smaller lending companies: Gold Star, Reliance, Prime Lending, Loan Depot, and they're all increasing. And I hate to say this, but I don't know the answer to this yet. I don't know why that is, and I think it's just something that I wanted to alert people to. I thought about leaving it out, because why say something if I don't know the answer to it? But I think it's better to just go ahead and include it in the data, and maybe it's something we discuss at the end of this presentation. Then looking further at loan applications between 19 and 20 and separating them out by loan purpose, home purchase applications did increase some by 9%. One of the biggest changes was for home repair and home improvement, declined by 22%, which I suspect strongly that this is due to homeowners during 2020 did not want contractors in their home for a week while they're doing repairs. Refinance is up a massive 83%. Likewise, I suspect this is COVID related, as people may be strapped for cash and decide to refinance their home so that they'd have more financial resources. I'm just going to keep going through these. You can make note of any questions, put them in the chat, and we'll get to them at the end. Taking a look at race in lending, the first thing, and I've been doing this each year, this is not a big surprise. This has been the pattern for a number of years. Home improvement is on the left and home purchase loans are on the right. The rejection rate for home improvement is generally higher, whether you're white or black, but it is about double for African Americans. Home purchase, it's just under 3 times as many rejections for African Americans as it is for whites. Now, I also looked at, because there's been a criticism over the years, many years, decades, from the lending institutions saying, well, these rejection rate and analyses don't include all the factors for why people might be denied. I decided to do at least one, which is income. And what you see is you've got the 5 categories: low income here on the left, moderate, middle income, then high income, and comparing white and black rejection rates. The key thing here is that blacks are rejected 11% compared to the white 3% at high income, but blacks are also rejected more than moderate income whites and middle income whites. This finding has been also consistent. I've done this for 3 years. So that is troubling. Then I also looked at home repair loans and looked at access to those loans by regions: outer suburbs here, west inner, west side of Cleveland, east inner suburb, and east side of Cleveland. And the trend here is that access to those loans, the blue bars, declines left to right as African American population increases, to finally on the east side of Cleveland, only 18% of the loans that were applied for were made, and this is the area with 81% African American population. So there's significantly an unmet need for home improvement. I also just want to throw in the fact that the Western Reserve Land Conservancy did a couple studies, property inventories of Cleveland, and found that there were far more properties that, well, you might not be surprised. Of course, there were far more properties that were F and D rated that needed demolition, but there were also C rated properties that were certainly significantly stable properties, but they needed repairs, visible repairs that were needed. And so there's a far greater amount of those on the east side of Cleveland than the west side. So there's a significant unmet need on the east side, and I would venture to say probably also on the east inner suburbs. So I looked at a main portion of this analysis is to take the top 15 lenders who made loans in different regions and by different types of loans. So I break most everything I'm doing here is by county-wide first, then looking at Cleveland, where 31 of 34 neighborhoods are lower moderate income, then just the east side of Cleveland, 80% Black population, and then the east inner suburbs, 52% Black population. I'm not gonna go through each of these because there's just too much detail here, but this will be made available and you can look at this. But what I did was these are the top 15 lenders for home purchase in Cuyahoga County, the loans applied for and the dollars applied for. And again, I'm not going to go through this because I'm going to spend more time on the charts that are going to be looking at the 3 lenders with community benefits agreements. So I'm going to skip these. And then I'm going to look, here's the CBA lenders, those with the community benefits agreements over the last 4 or 5 years. This is home purchase in Cuyahoga County. And what you see is the green line is Huntington, which consistently increased their home purchase lending in Cuyahoga significantly throughout the 5 years. Fifth Third really dropped consistently throughout the 5 years. KeyBank did make an improvement here through 2019, which I believe may have a lot to do with the acquisition of bank in New York. I think it was First Niagara. They gave them an additional mortgage lending capacity. But then in 2020, their lending declined. Now, as you'll note earlier, I had a slide that said that applications for home purchase did not decline. They did decline for home repair, but not for home purchase. So I'm not sure what explains this decline. US Bank, which I put in here just for reference, again, they are in discussions with the National Community Reinvestment Coalition for a community benefits agreement. Their lending changed some, but it's really, compared to the others, very insignificant change. Then I looked at City of Cleveland home purchase loans. You see the same pattern with Huntington increasing. You see the blue line, Fifth Third, decreasing somewhat. You see KeyBank, the red line, did increase, but then dropped in 2020. And again, US Bank, there's very little change. East side of Cleveland, there isn't any significant improvement with Huntington over the 5 years, but it is worth noting, of course, that Huntington's lending in the east side of Cleveland is at least 4 times that, 4 to 5 times that of the other 3 lenders looked at here. There's really not a lot. The numbers are very low on the east side of Cleveland for all of them. The eastern suburbs, Huntington, significant increase over the 5 years. Fifth Third, the blue line, again, there's a decrease. KeyBank, there is an increase, but then there's the drop in the fifth year rather. And again, US Bank has some increase, but not significant. Home repair lending, again, I used the same 5 geographies: county, Cleveland, east side, east inner suburbs. I did the same detailed analysis for the top 15. I'm going to skip that again and go right to these charts. Starting with KeyBank, which had been the leading home repair lender in the entire county. They declined, except for a little bump up here in the second year in 2017. Otherwise, KeyBank's home repair lending declined significantly through the 5-year period, and correspondingly, or just the opposite, Huntington's increased. A slight dip here, somewhat dip in 2020, but they've nearly had like a 5-fold increase from the starting period. Fifth Third did increase their lending significantly from 55 to 129. So that's a dramatic increase over the 5-year period. But then in the 2020, they declined. But then I'll go back to saying that all of the lenders for home repair here would see a decline in the loans they made and originated because the loans, the applications that came in were reduced. So this, we can't really say that this is a decline because they failed to do something here. Although I do think in the case of KeyBank, this drop from 556 to 273 is not merely due to COVID-19 here at the end. US Bank, fairly flat, no real significant change throughout the 5 years. When we look at Cleveland, we see similar patterns. The overall lending for KeyBank went down from 127 to 62. Overall, Huntington went from 14 to 61. There's very little change for Fifth Third and US Bank. East side of Cleveland, similar trends. KeyBank's lending, again, discounting the 2020 drop here, but KeyBank's home repair lending on the east side of Cleveland dropped dramatically from 60 down to 21 loans. Huntington did increase over the 5-year period. And again, Fifth Third and US Bank, there's very little change. In fact, Fifth Third only did one home repair loan on the entire east side of Cleveland in 2020. US Bank only did 2. East inner suburbs, similar trends. KeyBank dropped over the 5-year period from 110 down to 47. Again, discounting the fact that right here in 2020, we've got the fewer applications because of COVID-19, but the overall trend is still worth noting. Huntington started with 13 loans, ended with 71. Again, once again, Fifth Third and US Bank, their performance is about the same, not really significant change. Small dollar home purchase lending. Again, the same geographies were looked at, and I just want to say, so I want to make a note of something here. I've got a deeper explanation that as a result of the foreclosure crisis, as a result of lenders making a lending industry generally, starting the late 1990s through the 2000s, really aggressively pushing predatory loans, high interest loans in African-American communities. Those loans were not sustainable. We had high rates of foreclosure, high rates of abandonment. And the result of that foreclosure and abandonment is that on the east side of Cleveland, the median home sale prices are now below $50,000. So you can have homes that are actually decent homes on the east side of Cleveland. And to a lesser extent, this does affect some of the east inner suburbs, Maple Heights, Warrensville, Garfield, Euclid, that you can see this there as well, that there are homes that are in decent shape, but the market is not yet recovered yet. And so there is a need for loans at these lower prices, but because loan officers are often paid by commission, this is not very attractive to them. What are they going to spend their time on? A $40,000 loan in the east side of Cleveland, or a $200,000 loan in the outer suburbs? So that's the dilemma here. I also took a look at, I compared in 2020 home sales that took place in the 5 regions to the loans that were originated in the 5 regions. So in the outer suburbs here, you see that 80%, the red bars are the sales, arm's length sales. The green bar are the loans that originated. So you see that 87% of all transactions, all sales in the outer suburbs had a loan associated with them. West inner suburbs, 84%. Then it starts to decline. West side of Cleveland, 62%. East inner suburbs, only 62%. Then when you get to the east side of Cleveland, where the median home sale price is only $35,000, you only get 18% of all those sales associated with a mortgage. So what's going on here is likely a high degree of investor activity, investors who are paying cash for these properties, or they're borrowing from some private hard money lenders. What it really represents is there are affordable homes here, many of them that are in decent shape, and people can't get loans for them. That's a missed opportunity for affordable housing. Again, I did the same thing as I did before. I've got this detailed table with the top 15 lenders. This is Cuyahoga, then I did City, then I did East Side, in East inner suburbs. Again, I'm not going through these because I don't think I have time for it. And then I want to look though at the three lenders with community benefits agreements plus US Bank. There's really, to begin with, the numbers are very low. For all 4 of these banks, the numbers are low. Even Huntington's numbers are low, and they are declining. Although it's worth noting that, of course, Huntington still is sustaining higher numbers, in some cases 2 to 3 times, if not more, the other lender study here. Looking at the Cleveland alone, again, the numbers are not great. This is still, this whole question of low dollar loans is one that really needs to be solved because there's still a need for it. So the numbers are not great here. East side of Cleveland, similar, they get even smaller numbers. Even Huntington only has 10. Fifth Third had 4, KeyBank had 3, US Bank had 2 in 2020. Eastern suburbs, same thing. The numbers are very low. Again, Huntington at least had the highest number, but I would say there's no lender here that is really doing what I think is needed. There's still a great need. This is probably the weakest area for all the lending industry generally for meeting credit needs in Cuyahoga County right now. The last thing I looked at was low and moderate income lending. So this is people who are low and moderate income, regardless of where the geography is. So it could be in the outer suburbs. They could be in the east side of Cleveland. I used the US Census median family income for Cuyahoga of $66,000. Low and moderate is considered below $52,939. I did the same thing here, and I guess we could take, since this is only one table. I only did I did the entire county for this look. We have cross-country mortgage at the top. Huntington is next. Fifth Third Bank is maybe 6th or 7th. KeyBank is not in the top 15. Neither is US Bank. Third Federal ranks up pretty high. Howard Hanna, Quicken Loans, and then there's a number of smaller lenders. Some of these are Liberty Home Mortgage. Now let's look at the graph here. So the graph shows that Huntington is again at the top. They've increased somewhat from 243 or 239 to 296. Fifth Third declined throughout the 5-year period, went up a little bit here in 2020. US Bank stayed flat, as they have for pretty much everything that I looked at here. KeyBank did increase for the first 4 years. Again, that may be a result of the acquisition of First Niagara in New York, adding some mortgage lending capacity. But then again, as we've seen with KeyBank and the other analysis in 2020, again, discounting the home repair analysis because that's due to fewer applications, but this is home purchase. There were not fewer home purchase applications in 2020 overall. So let me see, what else have I got here? The last thing I looked at is bank deposits. And the question I'm posing is, how are money that all of us, we all have deposits in some checking account, savings account somewhere, and with all these banks, are those deposits being reloaned back into Cuyahoga County? And so I compared the dollars on deposits to the dollars loaned in 2020. Now, it's a detailed table, but let me say what we have here. First, want to point out that this data comes from the FDIC, Federal Deposit Insurance Corporation. The way they present the data, they cut off the last 3 zeros. So this isn't 30 million, this is actually 30 billion in the KeyBank top here. I did the same thing to match that. I did the dollars loaned. I took the home mortgage lending data. This isn't 337. This is 337 million. But then I ranked the top these are the top 13, which happen to be 99% of all the deposits in Cuyahoga are held by these 13 banks. And I ranked them in this shaded column here by the size of their deposits. KeyBank is by far the largest depositor in Cuyahoga County. PNC is next, CBNA, Citizens, and Huntington, Third Federal, Fifth Third, and so on. Then I put the market share of their deposits. So Key is 38% of all deposits. Then I listed the lending that they did in 2020. And then I have the percent of their deposits that were loaned into or invested into Cuyahoga County. what we have here is now the highest is two smaller lenders, First Federal of Lakewood and First National Bank of PA, which had smaller lending amounts, but I'm not sure I know the answer to this, but they did loan into Cuyahoga County significant amounts of their deposits, 26, almost 27%, and 23%, 24% for First National Bank. But if you look at the largest depositors, the ones that have $4 or $5 million in deposits here, the largest one is Huntington, reinvesting almost 7.5% of their deposits. Fifth Third is pretty good at 6%. Chase Bank is almost at 6% here. But then you get the top three are actually loaning proportionally less. KeyBank is only loaning 1% of its 30 billion in deposits into Cuyahoga County. PNC is fairly low, and so is Citizens CBNA. I do want to point out that KeyBank has commented to me in the past when I've done this analysis that it's not a fair analysis because they say these include our corporate deposits. I'm not sure exactly what that means, but I would say the banks, all these banks in different contexts, want to promote how large they are. They want to be able to say, we have the largest deposit base. We are the top 5 deposit base. And so I'm not sure it's fair for them to be able to say, to take the benefit of that. And then when it comes to saying, well, you've got all these resources, can't you be doing more lending? To me, there's an inconsistency there. So it may very well be that there's something different here by KeyBank, but this is an enormous resource. It is what they recorded and reported to the FDIC. So if it's reported to the FDIC, that's the data I'm gonna report to you. And I think that actually I'm done, but I do have something. I want to conclude with something here, and let me ask: do I have time before we go to questions, Chip and Catherine, to just talk for a few minutes about something? How am I doing on time? Actually, I think I'm scheduled to go. I think we do have time, if I'm understanding correctly, looking at the agenda. So here's what I want to say. Something that I only became aware of literally just a few days ago, and I've been looking at lending discrimination literally since the 1990s. So we're talking nearly 30 years. And I never knew, and I don't know how many people here logged on here know this, that in the 1800s, pre-Civil War, it was common for plantation owners, when they needed to expand, buy another plantation, buy new equipment, they would go to a bank. And they didn't just mortgage their property. Well, they did mortgage their property, but their property included slaves. So if you think about this history of the African-American experience in America with the lending industry, and I don't mean to be, and I have here 13 lenders displayed. This is not to associate this with any of these specific lenders, although certainly we have lenders on here. I know that Chase Bank was, in fact, even acknowledged. They made an apology that they not only held loans where slaves were the collateral, they foreclosed and then owned slaves. So there are lenders here, of course, amongst the 300 lenders that applied, had applications that I studied. Some of them can trace their history back to pre-Civil War. But this unique experience of African Americans in our country, starting with their association with lenders, is that they may have been either the collateral for loans in plantations, or they might have been owned by banks after foreclosure. You know, and I think many of you probably know that in the 1930s, the federal government published maps that steered lenders away from African American communities. They said they were high risk. They shaded those maps red, and of course we get the term redlining from that. And that really continued through until the passage of the Community Reinvestment Act in the 70s. And that changed things. That meant that loans became more available to African American communities until we get to the mid-90s, when some enterprising mortgage lenders in California got the bright idea, well, instead of, denying loans for people because we perceive them as a high risk, what if we say, yeah, they're a high risk, but we're just going to charge higher interest? And that started the whole trend of subprime predatory lending in the late 90s through the 2000s, which led us to massive unsustainable loans that were not feasible, high interest, massive foreclosure. And then what did that leave the African American communities with? It left them with the east side of Cleveland, where now homes had been valued at 80,000 median in 2005, are now the median is 35,000 in 2020. So if you take this long view, and this is not, again, to, I'm only saying this because I think it's worth keeping the context, and it's not to blame any individual lender that I've studied here today. It's just to remind all of us that we have African Americans living in the east side of Cleveland or in different parts of Cuyahoga County who can probably say that their ancestors were people who were denied loans in the 1930s because of the federal government's publishing of maps, and they may have been owned by banks before the Civil War. It's just, I think, worth keeping all this into some broader perspective. So I am done, and I believe we have time for quite a bit of time for questions and comments.
So folks, if you want to either raise your hand or go ahead and speak, we can unmute you, or you can unmute yourself and ask Frank a question. I think on your chart here that you just had, the one you have there,
sorry,
about dollar amounts, the one that always jumps out at me was Ohio Savings. Now it's New York Community Savings Bank, and they have a 0% return in the community.
Sorry, I forgot to. I tried doing Control N and it didn't take me back. So, yeah, New York Community Bank. I'm sorry I didn't point that out.
Yeah, they have a record of uncompromising disinvestment in Cuyahoga County. And of course, they, naturally receive a satisfactory rating from the regulator. I think that's one thing that Frank, over the years, we've always said, the regulators have been lapdogs to the lenders. And that continues today. Everybody gets an outstanding, everybody gets a satisfactory, even when you do zero loans. I mean, it's amazing to me. And we rely upon banks to reinvest, and they have these silver signs in their door that says every deposit is insured by all of us, by the FDIC. Well, when things collapsed in 2008, where did they go? Where did Sheila Bair go to get money? From the Treasury Department, from us. So these banks are not really private enterprise. They are socialized. They are socialized through our investment, through our taxes. And we're not going to come out of where we are in the east side of Cleveland and inner ring suburbs, Maple Heights, Garfield Heights, Bedford Heights, Cleveland Heights, Shaker, unless there's a commitment by regulators to do a better job. Hopefully this administration will do a better job. But go ahead. People have questions, put their hand up, or just go ahead and speak. Or you can take them off the chat, Frank.
Oh, I actually didn't realize this. I thought that either you or Catherine were monitoring the chat and because I haven't had time to look at that. Okay. Well, the first question is there a way we can have access to this full report? Chip, are you going to post this?
Sure, we'll post it.
All right. Second question, what's a brief community benefits agreement? What is that? These agreements used to be called CRA agreements back in the 80s and 90s, representing the CRA meant Community Reinvestment Act. And in about the last 10 years, I'm not sure why, but the NCRC has been calling them community benefits agreements, CBAs. But they are, the whole purpose of them is that a bank enters into an agreement to induce them to improve their lending in underserved communities, which of course would be people of color communities, but it could be low and moderate income communities as well. So that is essentially, and usually the agreements have target lending goals, so many millions or billions of dollars The problem with the agreements that I found over the years is that at a 20,000 foot level, the banks will often say, yeah, we met our goals. If you go back to those press releases, every one of the banks, the three that had these agreements, said, we met our goals. But I would say until you can look at the east side of Cleveland, the east inner suburbs, city of Cleveland, you get down to that level and see, well, what loans were made. That's, to me, the real measure of the success of these agreements. I'm going to go to another. What is the average amount of home repair loans that are applied for? You know, I may actually, we could take a quick look. I'm going to have to scan back up here just a second. Sorry. I'll get there. So in this first table, Cuyahoga County, and again, this is the top 15 dollars applied for. Actually, I don't have the, I'd have to, what we'd have to do is we'd have to do a quick division of loans applied for 4,300 into the dollars applied for. Let me, how quickly can I do that? I'm not sure how quickly I can do that. Anybody else, feel free to do it because I'm not, I'm probably not going to have it quickly enough, but it looks like, is it going to be about 10,000? I'm not sure. Well, I don't know the answer to that. And if Chip or Catherine, you want to do the math on that, divide 329 million by 4,400 and see what we get. This is, anybody, can you do that for me, Catherine? She got a calculator handy. Meanwhile, I'm going to go to the next question here.
Frank, I get 7,483.
Yeah, I was going to say somewhere below 10
Mm-hmm.
is maybe the typical home repair loan. Somebody's doing a roof, they're doing roof, they're doing furnace, they're doing siding, they're doing windows and doors. So thank you for doing that for me. Another question here is, do I have loan default data on these loans? And no, I don't, but I actually been thinking about this, that, you know, there's this tension always between, on one hand, wanting African-American communities, underserved communities to have greater access to loans, but balancing that against, we don't want to go back to what we had in the late 90s through the 2000s, where we had subprime predatory loans that were abusive, where, you know, you could get a loan, you didn't really have to show whether you could repay the loan. In some cases, you could fudge the fact that your home really wasn't worth what you were claiming. We don't want to go back to that because that would lead to a repeat of the foreclosure crisis. So it did occur to me that I'm going to start taking a look at the default data I don't have by individual lenders, but default will lead to a foreclosure filing. I can look at the foreclosure filings, and I will do that. Although I will generally tell everyone that foreclosure filings right now in Cuyahoga County are very low. All through COVID-19, they've been very low, and they have not come back yet. I think there's a fear that there's going to be this rebound after COVID-19, and we're going to see a flood of foreclosures. That has not happened yet, but I will commit to whoever's on this call, this Zoom, and to anybody else who hears me, that I'm going to start taking a look at that, because I think we have to be careful about that. And I think that's probably why the question was asked as well. Do I have data on the investor home purchasers, local or other? You know, I haven't done that research, but later in this presentation of this seminar, this conference, Tim Kobe with the City of Cleveland has done extensive research looking at investors and the trends of investors, where they come from, and the properties they're buying. So just to make a pitch for Tim, you should definitely stay tuned in to this conference to hear that's going to be, I think that's going to be chaired by Councilman Brancatelli. And I'm not sure, I know there's somebody else. I can't remember the name of the person who's on. Catherine or Chip, do you remember who the other panelist with Tim is on that one?
Jason Powers.
Oh yeah, Jason Powers. Yes, thank you. The coding, so coding waterfall for loan purpose changed in 2018, whereas in pre-2018, a home improvement purpose trumped a refinance one. For 2018 and later data, if an application qualified, and if an application qualified as a refinance or cash out refinance, it would be coded as that, even if the applicant was refinancing in order to get funds to perform. You know what? I'm not sure I can digest this. I would just say that there's a comment. I'm not sure it's a question. Let me see if I can find the end of this one. The concluding statement here, for anyone who, you can all go to the chat, it says the 2018 data changes, the changes in 2018 made it very difficult to determine which loans truly had home improvement as their use of funds. I think I see what's going on here, that the refis could also have been home improvement. People were refinancing for home improvement. I'm going to say that I don't have a response to this. I'm going to assume this is from somebody who seems to know something about the lending industry. And I would just reference that anyone who wants to, please take a look at this comment. It may be informative. It's almost more than I can digest right here, right now. But I do think it's worth anyone looking at it. I see we have a comment from Housing Court Judge Scott. The more things change, the more they stay the same. Yes, you are correct, Your Honor. Banks continue on with redlining and continue to be allowed to say, we use our best efforts. Yes, I have to concur with you. You know, the agreement that Cuyahoga County entered into with KeyBank, there's two sides to that. One is that the language does say essentially best efforts or we'll make a good faith effort. It doesn't say we shall or we must do those 13 commitments. And so from that perspective, it is not what we would want to see. But the other perspective is that it is the first time, I believe, that any county government anywhere in the United States has agreed to have its deposit agreement, its banking services agreement, have included in it the meeting of any underserved needs. So it's a small step, but I do think that amongst housing advocates, it's generally viewed as, wow, this is a great step forward. But the judge is right. Where we want to get to in future agreements with banks is not just we'll make our best efforts or we'll do a good faith. There's a shall. We shall do things. We must do things. So I think that's a good comment. Thank you, Your Honor. Well, I see that Aisha Weeks from the city of Cleveland, who does analysis, she says she's done similar analysis looking at deposit and found that most of the deposits are held in Cleveland branches, but most of the lending occurred outside of the city. Well, that is interesting, that the deposits are held in the Cleveland branches, but the loans are done outside of the city of Cleveland. Essentially, banks are taking Cleveland deposits and lending in the suburbs, not in Cleveland. Aisha, thank you for pointing that out. I probably, instead of looking at the 20,000 foot level Cuyahoga only for deposits, I should have done what you've done. But I also have to say for anybody who, to those who this might mean something, there's nobody paying me to do this. I've been doing this with no additional funding. I wish somebody would, because this is mind-numbing research, and I'm hoping that at some point someone will provide some funding, because I do think this is research important. And Aisha, your comment is well taken, and I will try to do that. I see a question that someone actually posed to Aisha. Is your analysis published or available? That is a good question. Aisha, if you do have, I wouldn't mind seeing it as well, Aisha, if you do have that available. I'd love to see it. Let's see, I'm looking for, a lot of people are saying that they agree that they'd love to see that. Where are people getting loans if they are not getting loans from these banks? Well, the first thing is on the east side of Cleveland, they're not getting the loans and they're not getting the opportunities to buy. And their attempts to buy a home may be, I hate to say trumped, but maybe trumped by investors. Say that $30,000 home that's for sale in Glenville or in St. Clair neighborhood, and it's actually not falling apart. It's actually, it may need repairs, but it's actually a home that's a great opportunity for home ownership. There are investors that will pay cash for that $35,000 home, and they will rent it out for the next 5-10 years, and they will recoup their $35,000 easily. Or they will use what are referred to as hard money lenders, which investors have access to. Certainly, I don't know that homeowners have access to those lenders. So I think, where are they getting loans? I think in many cases they're not. Let's see. Curious about online loan origination numbers. My hypothesis would be correlation along digital divide and race measures. I'm not sure that I'm fully understanding that question. So I apologize, but we're going to probably skip that, and maybe there'll be a follow-up to clarify that, and I could try to answer it. Oh, Aisha, thank you. Says, I think the comment about Huntington steering people into unsecured home improvement loans is very problematic. You know, I may have missed this, that there was a comment earlier about Huntington steering people to unsecured loans. Boy, did I miss that? Well, let's just take a look at that, what that says. You know, fielding questions from chat is not the easiest thing to do. But let's take a look. It says, I think the comment about Huntington steering people into unsecured home improvement loans is very problematic. I live in Buckeye and was denied the HELP subsidized loan for repair that was secured due to low appraisals. However, they offered me an unsecured signature loan for the same amount, but for 11% interest rate. Is there any way to find data on how many people were denied but offered unsecured loans at higher rates than they accepted? You know, the problem with that is doing any kind of research or investigation. It's where do records intersect with some requirement that they be public? The home mortgage disclosure data is public, but that's because it's a mortgage. It's secured by a mortgage. Unsecured loans, I don't know of a data source where either the federal or state government says that they must be reported. And so I'm not sure how to get that data. But it's certainly a good question that's being raised here. I also wasn't, I'm still a little puzzled by where the Huntington steering people into unsecured comes from. And it may be that I missed a comment here. But I would agree. I would agree that there is a need for, there's a huge need, as I said earlier, for home repair lending in Cuyahoga County and certainly in Cleveland. And one of the programs that's out there that is in Cleveland Heights right now is run by the Home Repair Resource Center. It's called the Challenge Home Repair Loan Fund. It's only Cleveland Heights. But I will note that in the 13 commitments the KeyBank made to Cuyahoga County, they specifically said, we will work with the Challenge Loan Fund and we will expand it countywide. That was 1.5 years ago, and I know that there's still an interest in seeing that happen, because if that was expanded countywide and this individual who applied to the HELP loan, this is essentially an alternative to the county's HELP program. It would be really more accessible for people like this individual here. And I think this is just a great example of why we need to expand the Challenge Home Repair Loan Fund beyond Cleveland Heights, because it would probably help people who are denied by the county's. The county's help program is really for people with the great credit history. It's not for people that live in the east side of Cleveland. So anyway, I'm glad this question was raised, because I think it certainly points out there's a need for the expansion of programs like the Home Repair Resource Center's Challenge Loan Fund. This question, I was thinking more about loans for repairs. Where are they getting home repair loan, if at all? Well, you know, people are using credit cards, which is not a good practice. It's definitely not a good idea. If you have a credit card that might have a $4,000 limit, I don't think that's the best thing to be doing if you need a new roof or if you need a new furnace. So again, there's a huge need for home repair resources. From Judge Scott again, when you look at loans for home repair on Cleveland's east side, are individuals getting loans in the areas where collective investment in new home building is occurring? You know, I don't know the answer to that. That is a good, if we took the east side of Cleveland into sub-regions, into specific neighborhoods like Glenville, Slavic Village, St. Clair. And I will say the data is, I have access to that. I took this analysis down to the regional look of east side of Cleveland, east inner suburbs, but it is possible for me to go deeper, to go to what happened in St. Clair, what happened in Glenville, what happened in Garfield Heights, what happened in Maple Heights. And I'm just being completely honest with people. It's a question of time and resources for me to be able to do this. This was a huge project, but I agree with Judge Scott. This should be done. And I will say that if I either can find the time or the resources, I should do it, or perhaps somebody that I would collaborate with would do it. Oh, and then in specifically, yes, Huff, Glenville, Shaker, Woodland, absolutely. The Buck Oak, Shaker area, those would be areas that would make sense to look at. Absolutely. Let's see, we have HFLA. Oh, that's the, I forget what HFLA stands for. This is Hebrew Free Loan Association, I think. They do have an interesting program. That is correct. I'm glad this is being pointed out, which can lend up to $10,000 interest-free for home repair if someone cannot get a fair interest rate and has the ability to repay. Yes, HFLA, I believe, stands for Hebrew Free Loan Program, or Hebrew Free Loan Association. And I don't have their contact. If anybody has their contact information and wants to put it into the chat, that would be good. So see, here's a comment. Huntington, for example, has a low dollar unsecured home improvement loan program that is not even in the HMDA data. Maybe steered wasn't the right word. That was just my experience. I see. Yes, if again, that's a good point. If it's unsecured, meaning there's no mortgage associated with the loan, then it's not going to be in the data that I've analyzed. And so that is worth knowing that Huntington, and it's possible that other banks do have an unsecured low dollar home improvement loan program. So thank you for that clarification. KeyBank and Buckeye denied a senior friend for a home improvement loan. The initial request was to get the loan via help. They never submitted the loan app for that loan, just their other loans. Since the other person mentioned how Huntington did them, did you track inquiries for help? No, I did not. So the help program is the county's home improvement loan fund, loan program, which I believe is with KeyBank primarily. There may be a couple other lenders, or have been other lenders, but KeyBank is the main lender for the help program. And I don't have access to the county's help lending data. I would be very happy to include that data if I could get it, because it would be worth noting what is the experience of the help loan program. My suspicion is that, as I suggested earlier, this seems to be a program that's geared for people with good credit. It seems to be geared more for the suburbs and outer suburbs, people that have resources. It is not necessarily a program that is aimed at the east side of Cleveland or some of the underserved communities. And again, that's why the whole idea of the Challenge Loan Fund that Home Repair Resource Center is doing in Cleveland Heights is really intended, it's really an alternative to the HELP program. But I'd be happy to research and analyze the HELP loans. Aisha Weeks comments, Judge Scott, from my conversations with reps from the appraisal community, is that new construction homes does not help the appraisal of existing older homes, at least not in the short term, because it is an apples to apples comparison in value. I'm just reading this again. You know, I don't have a comment on this. I don't. So I'm going to go on. I see Kevin Nowak from CHN Housing Partners. A primary reason that many banks are considering more unsecured lending is to fill the home repair need, because unsecured lending allows for more flexibility in credit underwriting. It is not subject to the onerous Dodd-Frank standards that secured mortgage lending is subject to. That is a good point. Thank you, Kevin. Oh, I see. Well, I think I noted, Aisha, that you probably meant existing. Let's see. The program I was referring to, part of Huntington CBA, they presented it last year, and it is only okay. So apparently there was a last year's conference. Huntington mentioned an unsecured loan program for home repair in their community benefits agreement at a 2.99% interest rate. That is very good. And then Hebrew Free Loan Association is clarified. Interestfree.org is the apparently the website address for the Hebrew Free Loan Program. And then Carrie at interestfree.org. Also Michael at interestfree.org. Thank you for those clarifications. Here's something. Third Federal Savings Loan has a low dollar under 10,000 home repair loan with a very low rate and a 20-year repayment period to keep payments low. That's worth noting. If the unsecured lending is on the rise, perhaps we need to push for more public data and regulatory reporting. That's a good point, because right now, unless it's got a mortgage, there's no public access to the unsecured data. That actually brings us to the end of the questions, and we are actually at the point where this was scheduled to go to 10:15, and we are at 10:13. I want to thank everyone for all those comments, and I hope I did justice to the comments and questions. I'm sure I may not have done it perfectly, but I did my best. So that's it.
Thank you, Frank, so much. As always, insightful, thoughtful, and the numbers don't seem to change year after year, but I think we have to keep our nose to the grindstone on these issues.